today's M&A environment, buyers are more selective than ever, and they're not just looking at your top-line numbers. So what exactly do they value? What makes one company command a premium while another gets passed over? In this video, I'll break down the key value drivers buyers are looking for and what you can do right now to position your company for a successful exit. Before we dive into specifics, here's the big picture. Buyers in the lower middle market, whether they're private equity firms, strategic acquirers, or independent sponsors, are looking for quality businesses that they can scale with confidence. That means they're evaluating more than just profitability. They're looking at consistency, risk, growth potential, and operational readiness. Let's walk through the core areas they focus on and what you can do to shine in each one. First up, EBITDA, your company's earnings before interest, taxes, depreciation, and amortization. This is the cornerstone of valuation. Buyers want to see 3 or more years of stable or growing EBITDA, clean, defensible financials with documented add-backs, and strong margins, ideally over 15%. What's your action plan for this? Eliminate unnecessary or one-time expenses, maintain monthly financial reporting, and get your books reviewed by a CPA. Clean, accurate financials equals higher valuation. The next big one, recurring revenue. Buyers love predictable cash flow. That means long-term contracts, high customer retention, and low churn and consistent purchasing behavior. If you've got sticky customers, show it. Formalize agreements, track renewal rates, and package the data to highlight your revenue consistency. Let's talk about financial discipline. Buyers want to trust your numbers. If your financial systems are messy, it raises red flags. They're looking for GAAP-compliant or reviewed financials, accurate tracking of margins and revenue recognition, and forecasts grounded in historical data. Tools like QuickBooks or NetSuite can help, and a pre-sale quality of earnings review can go a long way in building buyer trust. Here's a big one that gets overlooked. How dependent is the business on you, the owner? If you're still the rainmaker, the operator, and the decision maker, it's a risk for buyers. What do they want to see? A second tier of leadership like a COO or department heads, a team that's cross-trained and documented in their roles, and a succession plan and retention incentives. Delegate, systematize, make sure your business can run smoothly without you. Buyers are also looking for scalability, businesses that can grow without their costs growing at the same pace. That means documented workflows and SOPs, automation and tools like CRMs or ERPs, and a lean, capable team. Take your time to identify bottlenecks, streamline systems, and build repeatable processes. It will pay off not just in a sale, but in day-to-day operations too. Next, what is your competitive moat? Buyers want to know how you're protected from new entrants or pricing pressure. They're looking for intellectual property or proprietary technology, strong brand equity, and high switching costs and loyal customers. If you've got it, market it. Secure your IP. Highlight testimonials, market share data, and what makes you indispensable. Let's flip the script for a second and talk red flags that scare buyers off or drag down value. These include over-reliance on 1 or 2 customers, customer concentration, weak financial records or excessive adjustments, pending legal issues or regulatory risk, flat industry growth or unclear differentiation. If any of these apply, they don't have to be deal breakers, but they do need to be addressed early. Many buyers are hunting for companies aligned with key strategic trends such as fragmented industries that are ripe for consolidation, digital transformation or automation opportunities, mission-critical services, high-margin recurring revenue, and geographic or customer expansion potential. If you align with any of these, make it a centerpiece of your pitch. So what's the takeaway here? The best outcomes happen when founders understand what buyers truly value, prepare years, not months in advance, proactively resolve risks, and work with advisors who understand how buyers think. That's what we do at DealGen Partners. We help you get ready to go to market and land the right deal with the right buyer on your terms. If you're thinking about a sale or just want a roadmap to increase the value of your business, we'd love to connect. Reach out anytime.